Craig Bolanos joins us now, co-founder, wealth advisor, VestGen Wealth Partners. Craig, hey, buddy, how you doing?
I am absolutely fantastic. Despite all that's happening in the world, I still have a market that has found a way to climb a wall of worry year to date in 2026.
Sometimes the worry wall gets taller and it seems like the market doesn't care. I guess when I look at my 401k and my IRAs, I'm happy about it, Craig. But every time that mountain gets higher and the market climbs it, I get more worried. I have more trepidation. No?
Well, of course you can, and there's nothing wrong with doing such. I think having a little bit of anxiousness leads to due diligence, which leads to people doing their homework, which ensures that your investments are tied to your retirement plan and you're not taking on too much risk. So there's nothing wrong with biting your nails, but I would hope, John, that you're sleeping at night, because I'm still sleeping at night well, even though I saw oil go from 67 to 112 back to 70 up to 87. It's bouncing around like a ping pong ball in a 1980s video game.
Yeah, I guess we settle into this, well, the Iran conflict's going to be over soon. We have a memorandum of understanding. We're going to stay here in the 60s with oil. And then we go up and the people go, well, it's the upper 80s, sure, but it's all going to get worked out. And I just feel like we've been saying that for a long time. And my worry is the longer we're higher than we should be or need to be, the longer that these things can kind of clog up the system for even longer. You know what I'm saying?
Well, it's so incredibly important that price of oil did come cascading down in the month of June and into early July. I know as well as you do the worries over the last 11 days, that's specifically the count, since the activity and the conflict escalated further, driving the price up. What do I pay attention to? I have a new bogey. I just don't want to see oil staying in that $87 to $90 range by the time I get to Labor Day. If we're staying in that $87 to $90 range, it would be next to impossible to not have that oil leading to higher inflation, getting further embedded into this country, creating the affordability issue to be even more pronounced.
Yeah, we certainly saw a relief in the inflation number, but of course that was tied to the lower gas prices at the time. We'll see where we end up on the next one with this most recent pop-up. Okay, nearly 1 in 4 Americans, I like this note that you guys sent on over to me, stuck in a job for what reason? I mean, there's a lot of reasons, Craig, that people are stuck in jobs, but this one, I guess I shouldn't say it surprises me. It's a reason why a lot of us stay employed.
There's a reason for everything, and this survey caught my interest because it went on to say that 1 in 4 Americans feel they don't have mobility in the workforce due to being tied to their employer-sponsored health care.
Yep.
Now, I know that's common sense, and people are thinking, well, wait, maybe someone goes from one job to a new job. It'll be health care to health care, but not all health care is the same. I remind everybody that only 60% of America pre-Medicare under the age of 65, only 60% of America has employer-sponsored health care. Where's everyone else getting their health care? Oftentimes they're doing without, or they're getting it through the ACA, the Affordable Care Act. And the big story here is people aren't leaving their employment job to go and freelance. They're not leaving their employment job to start a new business because the pandemic era enhanced premium tax credit subsidies didn't get renewed. So for everybody who was getting tax subsidy on their health care, prices skyrocketed. You and I talked about that earlier this year. I think that's a part of this narrative, even if it's not explicit.
The prediction for folks in Illinois on the health care plan is another double-digit percentage jump. I'm sure a lot of us, even with that employer health care, have seen big jumps in how much we pay in premiums. But at least, Craig, you know what that number is, right? I even think you're absolutely right about starting a business, taking your side hustle to your main hustle. People fear doing that, and that's not what we want to see. We want to see innovation. We want to see people creating jobs. We want to see people jumping if they can. But I even think people looking for other jobs worry that, well, yes, my rates have gone up, my employer-sponsored health care. The uncertainty of what that new job may have can also clog things up, too. And ultimately, you know, we want people kind of moving around at jobs. It leads to usually higher incomes. It provides some mobility in the labor market to bring in new people. I mean, we don't want everyone stuck in one place is what I'm trying to say.
No, I understand. Listen, I support and I want mobility in housing, but people feel stuck because of what? Low interest rates.
Yep.
I want mobility in jobs. That's why I'm so happy that the ACA removed pre-existing conditions. That truly was people being stuck because of pre-existing conditions. That part is cured. It just comes down to affordability. But hey, you know what? Speaking of affordability, maybe on the way home, I'm going to go get myself an enchilada for $1, whatever that might be.
Yeah, I saw that. Great point. So lettuce-free enchiladas, which again, I don't know what they are. They're smothered in cheese now. And this is a way for Taco Bell trying to get people back, huh?
Got to get some people back because, listen, anytime there's a parasite in the underlying vegetable, a.k.a. the lettuce, it's a tough go. While I said the market's fine, there's a lot of what I call restaurant stocks, especially those that are tied to, companies that produce a lot of salads, produce a lot of lettuce. Look at Chipotle, look at Cava, look at the names. They're under pressure from what is a very real-world scary thing when this gets into the food chain from time to time.
Any worries about a Liberation Day Part 2? They failed at the Supreme Court, and I was listening to a really interesting interview from some of the economic advisors for the president, basically saying full steam ahead on tariffs. They think it's worked, and they think that it's not causing inflation, and they think that they need to keep on, putting the pedal to the metal. Give you any pause, Craig?
I'm not worried about Liberation Day Part 2, and the reason I say that is when that was first released, it was just larger than life. And everyone remembers it was so larger than life and partially unrealistic that bond yields blew out, interest rates went up, and thank heavens for Taco Tuesday, not for Enchilada, but Trump walked it back. Here, I believe the tariffs are an entrenched part of the system now, but I don't see anything as dramatic as the original proposals for March and April of 2025.
Remember when a 4.5 rate, though, that was the scary line, and now we've been hovering north of that for a while? I guess that's what I mean. I feel like we are all moving our own goalposts on what we're comfortable or not comfortable with, and I just worry about doing that. I don't know. That's what keeps me not up at night. I sleep fine, but just a little worry as I think about our economy overall, Craig.
Well, and let's lean into that worry. I think, again, worry leads to diligence. Diligence leads to homework. Homework is derived from education. That's why you talk about such a wide range of financial topics on the show to pique people's interest in these short segments so they can go and learn more so they, too, can get retired and stay retired.
Way to bring it on home. And you even gave me a part deux in reference, I assume, to Hot Shots, the great 1993 comedy sequel.
Hey, listen, I was thinking Charlie Sheen back in the day.
I knew you were going there. Craig, you are a delight to talk to. You're a smart guy, too, as you know. And, well, everyone else should know, as I should say. Take care. We'll talk soon, okay?
Be great. Thank you.